So in this video, we're going to talk about Rocket Labs, and I want to give you a couple of reasons why to keep this stock on your radar. Before we get into the analysis, let's get into the fundamentals. So Rocket Lab has fallen 80% from its highs at a time when many tech stocks are soaring. To be fair, the company is smaller and at an earlier stage than, for example, SpaceX, but it is the only other private rocket company that can consistently provide spaceflight services for customers, and it trades at just 1% of SpaceX valuation. To inch its way into the spaceflight business, Rocket Lab began operations with a small payload rocket called Electron. It currently launches around 4 Electron rockets every quarter, with plans to hopefully grow in the coming years. On top of rocket launch contracts, Rocket Lab also produces space systems for its customers. These include solar panels, space capsules, and software systems for operating missions. This is actually a larger portion of its revenue, generating $60 million last year. Now, Rocket Lab has grown its revenue substantially in the past few years. It is up 100% since going public just 3 years ago. Gross profits have also improved substantially as its manufacturing locations have achieved more scale. Gross profits was negative a few years ago, but hit positive, equating to $69 million over the last 12 months. Now, if SpaceX executes on its plans, the stock could be much higher 5 to 10 years from now. It can 10x its annual revenue and become the second big player in the rocket launch space, alongside with SpaceX. Its market cap is just $2 billion today, but it could end up much closer to $200 billion relative to where SpaceX valuation is. All right, so now getting into the charts, we're going to look at the daily chart first, and what you can see is price bounced off of a support level near that $3.40 level, and in the process broke this downtrend line. And so you had two confluences, signals to go long. Again, one was that support, one was a trend line break. And if I scroll to the weekly chart, you can see things a bit better, right? Buyers were protecting this $3.50 level, and so when price came back down, you had no evidence that price wasn't going to hold, or that the buyers weren't going to protect this level once again. Another confluence on the weekly chart. It's very subtle, but this is a bullish engulfing candle. Going back down to the weekly chart, going back down to now the 4-hour chart. What is a sniper entry? Well, it's an entry on a smaller time frame from a larger time frame resistance support level. And so kind of just looking at price on the 4-hour chart, you got this cluster of buyers right here. You had a rallying price, base candle, then a rally out, price pulls back, and that would be considered your sniper entry. On the 4-hour chart. So if I zoom back out to the daily chart to put things in perspective, this is a 10-cent risk. One would be up roughly 6x from now. However, scrolling back out to the weekly chart, look for price to move higher. Look for your first target to come in at the resistance support band at about $5.50. Thanks for watching. Subscribe, please. Like the video.